What's up, guys? Welcome back to another episode of Rawstocks. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended last week, and where price is likely to head into the next week. We're going to be taking a deep dive just into Tesla on this video. We're going to be looking at the weekly time frame all the way down to probably the 1 hour time frame on today's video, since it is the weekend, and try to get a good clear indication of where price might go, whether that's objectively to the upside or to the downside. We're going to look at both scenarios so that you guys can be prepared for price coming up, coming down, and how to play it accordingly. So first thing we're going to do, before we get into the charts, don't forget to check out the description below. There's links to the Discords, Rawstocks Discord, Traders Helping Traders Discord, where I'm hanging out during market hours. There's a 7-day free trial on the Rawstocks Discord right now for premium memberships that get you access to the Rawstocks exclusive options callouts, which can also be found in the premium section of the Traders Helping Traders Discord as well. There's information to find me on social media. There's information to support the channel by buying Rawstocks merchandise, or just donating if that's something that you want to help out with, keep us able to continue to bring you premium content. So let's jump into the charts here. We got the weekly chart up on Tesla. Okay, we got our RSI starting to point up, right, showing a little bit of strength. If we take a look at our previous move here, you see we're starting to break out of that RSI resistance on that channel. And then if you also wanted to look at here, we broke out, but this is our support line. So if we see, RSI come back down, we might find support and then continue to run from there. But it is starting to show some strength as it's breaking out on the weekly. We can see that in price, right? We've seen price just continuously be bullish here, all the way down from this October low. This candle here was a bearish candle on the weekly chart. Did not close below the low here. And then from there, we've had bullish close, bullish weekly close, bullish weekly close, bullish weekly close, another bullish weekly close. So that's 1, 2, 3, 4, 5 straight weeks of bullish closes. Although we do get some trading to the downside, or we do get some manipulation up and then push back down, we continue to have bullish closes. So at this point in time, we're looking for early week push downs in order to have a bullish close into the end of the week as we continue to ride this trend out. As you see, also, we continue to break and set higher highs. Now, we're looking for price probably to come up into 260, 261, all the way up into this order block, potentially at 280. We should see some reaction there. We also have an unclosed fair value gap here that starts at 255 and goes up to 260. So we could see rejection first there as we failed to deliver in this order block. See price roll back down a little bit and then see price push up. We'll be watching to see if that happens. If we're going to push higher into the end of the week, we're probably going to look for a wick, a down close wick on Monday, Tuesday. And then we might see price deliver to the upside Wednesday, maybe even Thursday. But if we get that early wick highs here on Tuesday or Wednesday, then we're probably looking for price to push back down later on into the week. Different ways you can play that, but we'll look at that. Also on the weekly time frame, 21 SMA, we are above it. Okay, we closed above it last week. Now we're above it this week. So things do look pretty bullish on that aspect. We took calls last week before we saw this move, right? We were just barely above the 21 SMA. We might even been below it. We were below it. We were down here. Things looked pretty bearish as we were running down into FOMC, but FOMC changed everything, turned things around. Next day, majorly bullish. So now our thesis has to change, right? Information has changed. So now I'm in those puts. I'm looking for an exit strategy. So what I'm doing, many of you have asked, are you holding those puts into January? I might hold on to the later puts that I have that expire at the end of January, but I'm looking for an exit strategy on the January 5th puts. Okay, the only last lines of defense that we got going on for a bear case scenario, we have this trend line, right, which also next week, right, but those expire in one week, 2 week, 3 weeks. So those are only 3 weeks left, right? So we could see this push up, push up, push up, and we have this resistance line, right, with no meaningful drop during that point as we test that resistance. So what I'm doing on those January 5th, I'm looking for an exit strategy or I might end up just having to completely dip out. Now you do see we have this channel or kind of this megaphone that we broke down out of, and we are back testing. So there's a couple different things that we have going on again that could show, even though it looks bullish, could change the scenario back to bearish. So we have to look at all of these things. Okay, we had this support level that we broke in October, and now we are back testing that broken support level. Could offer resistance, right? We also see the confluence here where they intersect, and we could ride it up, intersect there, which would be January, and then see a sell-off prior to earnings. So that's totally possible. So we gotta consider all those things. That we had that channel going. We also had one going here that we broke out of, and then also on a shorter time frame, we got this guy going on as well. Okay, so we'll be looking to see if any of those break, but those are things that we'll be watching. Let's move down into the daily chart. Daily chart's going to show us something very similar. We got above this high. We have a fair value gap here that laid, right? We aren't blown off of it yet, so we could blow off into it, hit this resistance line, come back down. Could happen easy. When you start to look at it on the daily chart, could happen faster than we expect it, right? Tesla in one day could get up here, test this trend line again, right? Get into this order block. Wouldn't be off the table to see. Let's use our path tool to show you what that would look like. Using smart money concepts, it wouldn't be hard to say this ends up being boom, fail to deliver into the deep into the order block. Then we come back down and we, test this fair value gap potentially, or this trend line that we broke, right? And then we see us pop deeper into that order block. Okay, we have this is the weekly order block. We also have the daily order block. So if we take a look, it's important to know where both those are. So if we take a look and we put both of those in there, our highest area of confluence is inside both of these order blocks. So right there. Okay, so that's what I would be expecting a move up. And look where that happens to be, right on our resistance line. Yeah, right at 268, 269. Right? So it wouldn't be abnormal to see that first one fail to deliver, even short of right to something like that. Puts us inside a bearish fair value gap, right? Maybe we even fail to get there. Maybe we end up inside this daily bearish fair value gap, right? Which should be just a little push higher on Monday. Boom, sell down into the fair value gaps down here, and then see us continue to push up into those order blocks, where then ultimately I think we would see maybe a deeper sell-off, or maybe just continue, to make progress on running higher. We can continue to walk this line down and then eventually pop up and take this whole order block out as we see premium on the daily chart, premiums all the way up here, and as we build energy to take on that 300 level, right? So, but also we could get up to this point, and then we could just reject entirely as we head into earnings, right? We could be waiting to see what happens at earnings. So if we also, just considered some other options with our path tool, you don't want to get too deep in possibilities, but let's just say we failed to deliver through that. We get up here in this order block, right? And then we kind of just something like that as we approach earnings, right? And then earnings is right here. We're either going to be boom, up through the order block, and then start to see a big rally, or we're going to be boom, dump down, earnings sucked, nobody liked what had to be said, guidance was horrible, right? And at that point, we end up taking these lows and then just getting destroyed and having price go even further and deeper down as Tesla's future looks, bleak over the short term or the medium term. So we'll see what happens. There's tons of possibilities, but we want to look at probabilities. Probabilities are short term. We're heading into this order block, right? Into the bigger weekly order block and into the daily order block that's inside the weekly order block. So somewhere in this range could be likely on a real short term basis. Again, Tuesday, Wednesday, Tuesday we're looking for manipulation. Wednesday, Thursday we're looking for distribution. So we'll see if manipulation starts to the downside. If it starts to the downside, I'm looking for my exit immediately on those puts, okay? Because then I think we're going higher into Wednesday or Thursday, and then once we deliver up here, theta starts to decay those positions too bad. Now, if you're not in any positions and you're looking to enter a position, if you're looking to enter long, you're looking for that early move, Tuesday, Wednesday for a low, If we don't get it, then you're looking for a short opportunity if we take a Tuesday or Wednesday high up in this order block and we got our levels already drawn out. Okay, let's look at the 4-hour time frame. Similarly, you see we had a market structure shift. We could pop up. We got not only do so the 1 hour shows us even more, right? We got the light blue being the weekly. We got the dark blue, in here being the daily. Now we got a 4-hour swing order block inside of that same range. So this right here is going to be our highest confluence area, 261, almost 262, all the way up to 268.73. Okay, we are probably heading in that area. We're probably going to reject that area first, or fall just short of that order block. I bet we reject right at 262. Then I think we come down. See, we got a 21 SMA on the 4-hour moving up. I'll show you what I think. What I think is early out of the gate, we're going to do something like that. And I think we're going to reject it. We're going to come back down, test a rising 21 SMA. And then I think we're either going to retest this, break through it, or give it up and then pop up and drop like that. There's not a ton of catalysts coming up. We already just kind of had our catalysts, so we'll just have to see which way it wants to head. It does look pretty bullish, but the rest of the market is a little bit overextended, and some of the bigger stocks are starting to look like they're going to have more selling pressure kick in. But also Tesla was lagging to this whole move, and so Tesla might see some strength while the rest of the market sees weakness. But again, looking for that move to happen up into this high confluence order block on all the time frames, with the swing order block as well on the 4-hour time frame. So last thing we're going to look at is the 1 hour as well. So again, 1 hour, we got that daily, weekly, and then inside here also 266 to 268, 269. We have a 1 hour swing order block there as well. So again, wouldn't be uncommon to see this pop up, fail to deliver, and then pop back up and take it. We do see the 21 SMA, right here, starting to look like it's going to flatten out. So, maybe that sees some early selling, maybe down into this fair value gap that's down here in the low 240s, maybe all the way down into this fair value gap. Take that, reprice it, and then start to head up. If we come back down first, we're probably going deeper into the order blocks above, so I wouldn't get too scared. You also start to see on the 1 hour time frame that we got divergence setting up. So let's take a look at that, right? We're getting lower highs on the RSI. We're getting higher highs on price. So it is starting to get exhausted. It really just was an FOMC move. A lot of hype around it, and a bullish reaction. But that doesn't mean that we're going any higher. We also could stop here, and that would be the fail to deliver. Then I'd say we'd roll back, reprice into these fair value gaps, right? There's not a whole lot other stuff going on like the 1 hour. We got another fair value gap down here. But I think that even if we came down, I think that this, this order block would hold. And I really don't even think we're coming all the way down that low if we're going to head higher. I think we'll probably come back down into the low 240s if we start heading lower, right? Which isn't too much. It's $10. Maybe we see that on Tuesday, Wednesday, so it doesn't take it all at once. Maybe we see it reprice down into this fair value gap, then see it bounce up into these order blocks, and then make a decision. Do we want to come back down and then take out some of these lows, some of the sell side liquidity, or does it want to pop up, take more of the buy side, close this order block out, right? Set some new highs. I just don't think we have the catalyst for that yet. I think we need something really positive to come out to just have us make that run up to like 280, 300. If we did, it'd be just sheer, bullish momentum, and I don't think it would hold very long. Also on the higher time frame, there's not a ton of structure here. On the short stuff like this right here, right? We do have a lot of structure when we did back and forth, back and forth, back and forth. Okay, but if you look at this move, okay, inside here, there's really no structure. We have a low here. We're going to mark these things off. Okay, we got this low. That's going to be important. We have this low, which is already marked off right here. Okay, and then slightly above that, we have that low. But it's this moves that I'm talking about that don't have a lot of structure. So inside that, you end up having this fair value gap, right? We label those green. And then we have, these are just imbalances, right? They're buy-side imbalances, buy-side inefficiency, sell-side imbalance. So the sell side could not imbalance The buy side was inefficiently delivered to. So buy side inefficiency, buy side inefficiency. All right, this was a nice wick. There's no inefficiency in this candle then. And then we see one more buy side inefficiency here as we saw price come back down and reprice. So all of this is balanced price action. There's a tiny fair value gap right here, but not too worried about it. I think we'll probably early in the day reprice that, or even in pre-market reprice down into this level. And I think we will for sure probably come down to 245 to 242 next week at least, unless we just see straight ripping, and that's entirely possible, but don't think it's going to happen. So other than that, we're not going to look at the lower time frame charts today. Just going to show us similar stuff. Yeah, so we'll look forward to trading tomorrow. Find me in the Discord. Don't forget to smash a like, subscribe, share with all your friends. We're pretty close to getting 500 subs. So once we do, we'll be giving away a t-shirt or tank top to one lucky member. Good luck on your guys' trading day. We'll see you guys tomorrow.